Hi traders, welcome to this video about the euro dollar, pound dollar, other dollar pairs, Bitcoin, you name it. We're going to take a look at all of these charts, including DAX and S&P 500. We're going to take a look at what to expect in June, what happened in May, and how these charts are going to evolve. So let's get started. By the way, if you didn't see it already, we have at this moment 4 different managed accounts with the currency. We have a portfolio PAM, we have Chris's mix, that's my own choice of EAs that I put together. We have Zusier, but new, without the grid, and Athena EA, which is fully focused on grid trading, if you like that approach. It's been performing very well. So 4 different styles with different strategies and different pairs and different time frames to give you as much diversification as possible. All right, that said, we're going to take a look at the euro dollar right now. Basically, euro dollar finished at wave 5 up in here probably, and you can see that the wave 5 was slowing down. Didn't quite reach the target I had in mind here at 23.6 fib, but it was very close. We're talking only about a few pips difference. And of course, when price gets close to a target, it can always just fail to miss that ultimate level. It basically made a rising wedge at the end here, as you can see, price closing in here, losing some speed, looking more corrective as it was moving higher. Now, when price broke through that trend line right here, a correction was likely. As you can see, price made a dash down, retracement, and then is continuing to fall lower. This wave 5 happened after we had a wave 4 here at the 23.6 fib. We had a wave 3 up in here, wave 1 probably down in here, and wave 2 here, or maybe even a wave 1 here and wave 2. It doesn't really matter. We had a 5-wave pattern to the upside after a very long downtrend on the euro dollar. So that 5 wave, when you consider the bigger picture here, is probably a wave A, and we're looking probably at a larger ABC pattern, and that ABC pattern could be part of a bigger complex correction. Something like this, I'm expecting like that ABC pattern. Now that could be part of a more complex WXY of a larger wave 4, because we're probably looking at a wave 1, 2, 3, and that wave 3 might have been completed, at least some type of wave 3, either this big wave 3, or if not that wave 3, maybe a smaller wave 3 like this, 1, 2, 3, 4, 5. That's also possible. Let's put the fib from here to here. And no, sorry, the other way around. Let's see, from on the wave 1 potentially here. And you can see we went all the way down to the minus 200. So that could still easily be a wave 3 of 3 that's completed. We have a wave 3, 4 of 3, and then we go down to complete wave 3, and then we have another wave 4. So we can use 2 fibs. We can use this one if it is a smaller wave 3, or we can use this one if it's a bigger wave 3, and see how price responds to these levels. Okay. In any case, whether it's a wave 3 of this bigger or smaller degree, it doesn't matter. We are expecting some type of wave 4. We are expecting price to respect these Fibonacci levels, basically. And so we don't expect the retracement to go deeper than 111, for instance. And we expect price to turn at 108 for the moment to make a ABC pattern in B, wave B, and then move up within wave C, and then maybe again down and up as part of that WXY of a larger wave 4. Okay. So we don't expect the downtrend to continue right away, because price on lower time frames seems to have completed the 5-wave up. So we're now expecting an ABC down. So we can put a fib actually on this swing high, swing low, and it looks like price will fall down to the 38, make a bounce there perhaps, and then fall again to the downside, 61 or 78 or 50 fib within that wave B. So this is wave A, and then we're expecting the ABC red here within blue B, and then a bounce at these fibs for blue C. That blue B price may not break below the bottom here, because otherwise it's not an ABC zigzag, and that would invalidate the ABC blue. So as long as price stays above that bottom, it is valid. Now, if price breaks below the 61.8 fib, then that is a slight question mark, because usually zigzags, ABC zigzags, they basically respect one of the fibs, 38, 50, or 61. So it would be less than it would not be ideal if it breaks below the 61 for this ABC zigzag version. And of course, if it breaks below the 88.6 fib, then it's probably not an ABC zigzag. Then it was maybe some other type of formation to the upside. In any case, my 5-wave pattern is then probably not going to unfold. And yeah, we have to probably look like two alternatives. Maybe this was an A, B, C like this as part of a W, or A, I should say, and then we have ABC as part of a B, and then 5 waves up for C, for instance. That would be the alternative if price breaks below the 61.8 fib, and yeah, that would probably be the main scenario if it breaks actually below the 61.8 fib. Okay, if it stays above it, then I am more looking at the ABC zigzag to the upside. Now, eventually, this downtrend, this bullish correction should end within the downtrend, and we're expecting price to make some type of correction and then move lower to get a lower low within that 5-wave pattern to the downside. After a lower low, we are either in wave 3 of 5, 5 of 3, or in wave 5. So let's see how far this downtrend can push. It could still push quite far, but maybe eventually the downtrend could be finished. Maybe I'm a little bit talking about it too soon, I don't know. But yeah, it could go down to parity at 100, maybe even a bit lower. Let's see how far this downtrend can push. Eventually, a downtrend continuation, though, the main message in my eye is that there's a bullish correction at this moment, and eventually a downtrend continuation is likely. Although this correction could be sizable. So let's keep an eye on these fibs and the bounce up and these targets up in here for that scenario. That's my view. Pound USD, same thing. Also looks like a 5-wave up. Also had a strong downtrend. Could go into a correction. This correction might be a little bit different. It could be a 5-wave, but certainly had a very strong ending wedge, as you can see. Final, yeah, look at that. Very nice rising wedge. And if we put the fib from here to here, it's already at the 38.2 fib, so might retrace a little bit deeper than the euro dollar. If it's a 5-wave up, it should respect the 61 and 50 or 50 fib. Here too, we're looking for an ABC pattern into that zone. If it breaks below 61.8 fib, then maybe a bigger ABC correction like that is likely. Dollar yen, I think that we're looking at a very nice corrective channel here. Price broke above that channel earlier in May, end of May. Price has been moving up pretty sturdy after that. So question is, will price make a flag here and then break higher, or will there be a correction back to the 38 and bounce? I'm looking for a move up, either from the break of the bull flag or from the 38.2 fib. Personally, here is not a good spot because it's approaching resistance. But yes, that said, if anyone managed to catch the break of this channel here, or even here, or maybe even here, it was a good moment to jump in that breakout. I think, considering the strong uptrend we had on several time frames and the shallow correction and the bounce at the shallow fib, so that was a good one. And it's moving up nicely. Let's see if it has pace to continue. I would like to see a bull flag on a lower time frame before trading that to the upside. Bitcoin, I was bullish, but price respecting the 38.2 fib, so back to neutral or bearish. This looked like a good breakout, and I jumped in that trade to the upside, but jumped out as it just recently actually here, as it broke through the channel or the support trend line actually, and failed or made a head and shoulders pattern here and failed to break above the 38.2. I was even thinking about exiting somewhere in here, but I didn't want to be impatient and wanted to give it a chance to break about a 38.2 fib. Maybe that was wishful thinking. I was really thinking about exiting at that moment here after taking the breakout above this resistance. But secretly, I was hoping for a wave 3 instead of a C. So I decided to stay in, but when it broke through the support trend line here on the hourly chart, I did exit for a small profit, as you can see here, somewhere around here. Not much, but a little bit. Anyhow, not a loss in any case. So yeah, I was secretly hoping maybe for wave 3, and the fact that The downtrend could be finished just because of the fact that there was a 5-wave lower here. I think that this could have been a wave 4 and just a wave 5. So secretly was wishing maybe for a larger kind of reversal. That's why I maybe hang in there a little bit longer, although I was doubting. But now I'm not sure if that scenario is taking place. The bounce at the 38.2 fib looks more like an ABC pattern now here on the 4-hour chart like this. That might look more like some kind of wave 4 correction, and maybe one more lower low is likely. But if we get the lower low, I really think that another bounce will take place. It seems like 5 waves is finished here. That could be wave A. I think we should get eventually wave B, and then maybe then again down for wave C. Maybe I'm too optimistic about Bitcoin. I don't know, but that's how it seems like to me. Now, this wave B doesn't have to be that far. It could go to the 38 or 50 fib. I don't expect more at this moment. And after the ABC is finished, a new uptrend can emerge maybe in the next year, 2023, beginning 2024. That's just my what I've read about the theory of halving and the value that Bitcoin goes up as you get closer to these halvings of, I mean, that the process of mining is half of what it used to be. Typically, I read that the pattern is that the Bitcoin value goes up when there are less coins being mined. Let's see if that pattern continues and repeats in the future. Time will tell, but my analysis is indicating that after the ABC is finished, and that might take a while, eventually an uptrend will take place 1.5 years from now, let's say. So, but in any case, I think that there's a fair chance of a wave B starting eventually to the upside. Same thing is valid for Ethereum, although Ethereum has been a little bit slightly weaker because we have a lower low here, a new lower low. Bitcoin didn't have that. Gold made a sturdy bounce up, now making a correction. I don't think that gold will lose a lot of value here. I think it's in a macroeconomic strong spot. It might not make a huge rally here. It might not continue with the uptrend. I don't think it's going to lose or make a lot of retracement either. I think that as an investor, gold is a good thing to have. It doesn't give any yield. It doesn't give any return, of course, like maybe bonds would, or some stocks do, of course, and maybe real estate does, but it's still a good asset to own, to have in one's portfolio, and I think therefore will always have some demand, and therefore will, in these times of difficult times, from a geopolitical point of view, from an inflation point of view, from an economic point of view, I think that there's enough kind of threats out there that make gold interesting for a lot of investors and funds. So I don't see, I think that it's an uptrend technically. This looks like a wave 4. It might go sideways for a while, but eventually I think some push up for a higher high seems likely to me. All right. Now, of course, with inflation going up and potentially interest rates should follow to combat that inflation, usually speaking, that's not good for stocks. Although typically what I read is that the stock market is most affected if the interest rates are higher than 5%. Now we're still way below that in the US and in the Eurozone. But still, I don't think it's a good scenario here for stocks, with purchasing power being undermined that heavily. I think companies might feel that force and they have their own supply issues to deal with. So I think it's a tough environment with interest rates going up. Some investors might prefer bonds with more and more debt being accumulated. Maybe some investors prefer gold, not buying any debt. So just my 2 cents here. I don't think I personally exited a lot of my stocks, or the majority of my, not, I would say 95% of my stocks, somewhere end of 2021 here, and still feel good about that personally. As you can see, it didn't go anywhere. It just went down after that in stages, but still. And I think that this rally will face resistance and probably make another move down to the 61.5. That is my overall analysis on technical and fundamental point of view. It's made a strong rally. I just think that it's going to find resistance, and if it makes one more push up, it could be an ABC pattern, but find another push down. That's my view. Same thing for DAX. USD might look like a flag, but I don't know. It could be a failure of a flag too. So if it breaks through the support, it could easily see this breaking to the downside. I would be open to both breakouts, maybe even favoring a break to the downside looking at this. But it could break to both directions. And pound New Zealand and pound odd might be already breaking indeed to the downside. So though, especially pound New Zealand seems to be breaking right now. Euro pound slightly pushing upwards. All right. That's it for now. We'll be back with a new update on the financial markets beginning of July. Wish everyone great trading. Check out those PAM methods from elite currency to diversify your trading. Of course, with capital, you can afford to risk. It's all within the world of trading and Forex and CFD, of course.